And right now, let's get to Justin Kuczmarski, President of NAV Valuation and Advisory. It's wonderful to see you.
Thanks again, Nicole.
So what are you thinking about some of the volatility? We're seeing some of these stocks going wild after their earnings. I mean, it's no surprise to see some volatility. The market's coming back after 2 weeks of selling. I was looking at some of the week-to-date numbers, and really what we're seeing is the Dow, the S&P, they're up more than 3% this week. So it really, and the Nasdaq's up 4%.
I think the market and a lot of the investors are shrugging off the coronavirus. I mean, S&P estimates for the fourth quarter earnings that come in, both from revenue and earnings, exceeded expectations 65% of the time. And a lot of the sell-side analysts at the banks and buy-side analysts are sticking to their guns and not lowering expectations, even in concerns about the virus.
So what kind of portfolio do you put together in an environment where a market has run up, really a great 2019? We've been getting in some good economic reports, right? We got that ADP number today. We got the ISM. All of those things put together have been looking good. How do you put together a portfolio?
I have three defensive stocks, also growth plays. And the first is FedEx. I think FedEx has gotten a bad rap, and it really comes down to transparency. CEO Fred Smith, you have to remember, is an innovator in logistics. It invented overnight delivery years ago. They introduced Sunday delivery. The market shrugged that off. But the guidance that FedEx is providing has been blown apart a few times. So people are questioning the earnings. On a sales basis, it's trading at half the multiple of UPS.
So when we look at FedEx, I mean, we talk about, you were right, you actually wrote in your notes, down 50% from 270. I mean, when we look at a name like FedEx, and it really is sort of multifaceted in that it certainly is an economic indicator, right? How much are people really sending? They had the Amazon story, and they have competition. But you think this has upside potential? I mean, when you talk about upside potential, what are you really looking for?
I think if you go on $260 of shares and a historical multiple of 1 times, right now it's at 148, it could potentially go up $100. Now, even if it goes up a fraction of that and gets in line with UPS, it's still substantial growth. I think the restructuring effort that's been announced and the poor earnings guidance, it's like a dual-edged sword, being punished on both regards. I think it's a transparency thing. I think if Fred Smith can right the ship, and I'm betting on Fred Smith once again as an innovator in the space. 5 years ago, they were head-to-head against UPS and winning on every single metric. Amazon, despite the headlines, is less than 2% of overall sales. So I think the headlines make for a great story to kick FedEx, but fundamentals, it's still very well undervalued at the time.
Wow, you gave us some real great numbers of its potential there. What about another name like Big Lots? When we talk about, those mall-based retailers, some of those smaller retailers have had a hard time. But Big Lots is a different story, and you think this is a buy?
I think if you look at the analysts, been upgraded by Zacks recently. A lot of analysts have the stock on hold, but it's a deep discount play. So if the economy, getting to your point earlier, potentially softens a little bit, deep discount retailers always benefit. Even today, the breaking news, Macy's announced they're closing 50% of their poor performing malls. That inventory has to go somewhere. They have logistics advantages. I think Big Lots, if you look at it from earnings and sales, is roughly fair value between $45 and $50. Right now it's at $28. There's room to grow in any direction there.
And when you look at it, you said that you really look through the numbers and you think it has solid fundamentals. And the consumer, I mean, what we've seen from retail sales, we know that the consumer is strong and can spend, but they're just particular where they spend. So you're counting on the consumer and these fundamentals?
I think Amazon has established a new norm. Everyone's sort of ingrained in looking at the best prices through their price matching. Deep discount companies such as Big Lots, particularly in the bigger states, Texas and Florida, are well positioned to get at that high-end inventory and move it when companies, big box retailers, are shuttering. It's almost the opposite side of the trade from FedEx betting on certain retailers.
Another name, and this one is recession resistant. I like that. And it has lower operating margins, which spook people a little bit, but it was the combination of potash and agrium, right? NTR, Nutrien. This was the combination of those two names. It's been under some pressure. 1 year it's down about 15%. But you think that this one's recession proof, which I like that. What is that about?
I think farming is never a growth industry. It's mature play. But a market cap of $25 billion, the market is punishing this company because of restructuring issues similar to FedEx. To integrate both of these entities, It takes time. It takes 3 to 5 years from a transactional standpoint. The dividend yield has doubled. This is a 4% dividend yield.
Oh, my good point, yeah.
Buybacks have been strong for Nutrien. So it's the largest potash producer in the world, 20%, and the largest, even as a Canadian company, agriculture retail in the U.S. So regardless of what happens on a macro play, this is a defensive stock. I think the market has really punished it too much for a lower operating margin. But if they get the economies of scale, get the synergies, which will take time, it's a big deal. It's a $25 billion company. Right. We unlock value in the years ahead.
Unlocking value, beaten up a little too much, and that dividend is pretty.
Yeah.
Up to 4%, up from 2%. It's great to see you, Justin.
Thank you, Nicole.
Thank you so much.
Appreciate
Thanks for coming on the show. Justin Kuczmarski, president of NAV Valuation and Advisory.